I would imagine that we would start to see sell off in the dollar, a rally in gold. We didn't really see that today. It was actually very quiet, but I do expect there to be some type of move now in the gold market, and there may be something even going on in China. I've been reading stuff and I've noticed.
As seen in this video by Peter Schiff, we step into a financial crossroads. Anticipation looms for a potential dollar sell-off and gold rally, with China's rising interest in gold adding a compelling twist. The Federal Reserve's latest decision adds intrigue, promising a captivating journey through the world of finance. Join us as we unravel the mysteries of these financial shifts and their potential impact.
Another Fed day today. This is when the Federal Reserve announced the results of their two-day meeting. And as usual, the Federal Reserve did exactly what the markets expected them to do, which has pretty much become a pattern with this Fed. Powell does not want to surprise the markets. He wants to deliver to the markets exactly what they expect. And so every time we get an announcement, it's exactly what the market has already priced in. And so to me, I think that that means the Fed is really almost taking their lead from the market. And they're very cognizant of how the market might react to their decisions. And so they're trying to make sure that their decisions reflect what the markets expect so that there isn't some surprise. The rate hike, or not rate hike, the rate decision. So as expected, the Federal Reserve left the Fed funds rate unchanged in September at 5.25 to 5.5. Now, Powell did indicate that there is an expectation of one additional hike. And that's basically all the Fed expects. So maybe 5.5 to 5.75, and then they're done. Which means they're really done right now. Because even if you raise rates by another 25 basis points after having gone from 0 to 525, what difference is one more 25 basis point hike going to do? And if they haven't done the job now, if 5.25 isn't enough to bring inflation back down to 2%, which it's not, but if that's not enough, then 5.5 isn't going to do the trick. And if 5.25 is enough to do it, then what difference does an extra rate hike mean? I mean, it's practically the same thing. It's not like people are going to change their behavior dramatically because the Fed funds rate is 5.5 versus 5.25. It's too small a difference to be meaningful. And so this really signifies the end of the hiking cycle, at least to the extent that the markets are anticipating. So I would imagine that we would start to see sell off in the dollar, a rally in gold. We didn't really see that today. It was actually very quiet in the foreign exchange markets, and gold did finish the day slightly positive off its highs. It was up maybe $12 an ounce before we got the decision, but the markets kind of sold off late in the day. And I'll get to the market reaction after I finish talking about what happened. But I do expect there to be some type of move now in the gold market, and there may be something even going on in China. I've been reading stuff and I've noticed that the price of gold in China is actually, rising. You can actually, if you can arb it, you can actually get more money. Gold is selling at a premium right now in China than it is pretty much everywhere else. So the Chinese are buying gold. So something's going on that's causing them to buy more gold than normal, which is pushing up the price of gold in the Chinese market higher than the global market. So that could be indicative of something that's going on. I just don't know what it is, but whatever it is resulting in more buying of gold in China. But anyway, so getting back to this rate hike, when they announced it, it was pretty much, we're leaving rates unchanged. We're still a long way from our goal of getting inflation back down to 2%, but we're committed to doing it, and we're going to do it. Really nothing new. Powell did mention that the Fed still intends to continue significantly reducing the size of its balance sheet, meaning that there is no let up in quantitative tightening. And so even though the Fed didn't raise rates and may only raise rates one more time by 25 basis points, they're going to continue to tighten via the balance sheet by shrinking the balance sheet. And of course, that is a huge problem. And this problem was not really acknowledged at all during this press conference that followed the announcement that rates would stay the same. Between the last podcast and the one that we just did, as I expected on my last podcast, the national debt moved through 33 trillion. So we now have a national debt in excess of 33 trillion. What's significant about this is that we just hit 32 trillion on September 15th. So it's been 3 months, and I think it was yesterday, so maybe 3 months and 4 days. That's all it took to add $1 trillion. Now, outside of the pandemic collapse, and I'm not even sure, maybe this is even bigger than the pandemic, but I don't know that we've ever had a single 3-month period. I mean, that's basically a quarter, 1 quarter, where $1 trillion is added to the national debt. That is a huge number. I mean, we're not even in recession yet. I mean, one of the things I'm going to talk about is Powell kept talking about the strength of the economy, how strong the economy is, how unexpectedly strong it is. Yet this unexpectedly strong economy is hemorrhaging red ink. $1 trillion in the last quarter. The national debt didn't even hit $1 trillion until sometime in 1980 when Ronald Reagan, was elected. 1980. So that means it took the first 40 presidents 190 years to run up $1 trillion in debt. Yet President Biden ran up the last trillion in just over 3 months. That tells you how big this crisis is. Yet not once during this press conference was the national debt even mentioned. Government spending mentioned. Powell's doing a press conference on inflation, and the main source of inflation is government debt that the Fed monetizes. Yet the topic of the out-of-control debt and all the monetization doesn't even come up. I mean, how do you even have a press conference to discuss inflation and you ignore the elephant in the room, right? Well, that's exactly what happened during the entire conference. And by the way, everybody is excited to listen to what Powell has to say on these press conferences. It's not because the guy knows anything. It's not like Powell has some kind of special knowledge about the economy or inflation that the rest of us don't have. And we have to kind of sit back and wait to get the inside scoop from Powell, right? He's like the Wizard of Oz. He's all knowing. And, us ordinary folks, we don't know because he's, like this super economist, because after all, he's the chairman of the Federal Reserve. I mean, he must be the best out there. Otherwise, why else would we have picked him, right? He must be this super genius about the economy. And plus, he's got all these people working for him. He gets all this data. And so surely he, possesses some special knowledge that just ordinary economists aren't going to have, right? Well, no, that's not it. I don't think most traders believe that Powell has any idea. The reason they care about what he says is because they want to figure out how to position their trades. Because it's not about what's actually going to happen. It's about what Powell thinks is going to happen. That's what people care about. What does the Fed think is going to happen? And then they can decide, well, if the Fed thinks this, what are they likely to do? And Powell actually talks about what he's likely to do. Now, maybe it's just a bluff, but it doesn't really matter to the markets because traders react to what the Fed says and what the Fed claims they're going to do. So it's not because he knows what he's talking about. It's just because everybody wants to know what he's thinking about doing. or what he's pretending that he's going to do, because that is important for short-term traders. So that's all it's about. It's not about actually knowing, like, oh, Powell's going to tell us what the inflation rate's going to be next year or what the GDP rate's going to be. He has no clue. He doesn't. He's just guessing. Right? In fact, his guess is probably worse than a random guess because it's heavily biased based on the politics. And that's one of the reasons he keeps talking about how strong this economy is.
As we conclude this insightful speech by Peter Schiff, we invite you to stay tuned for more updates on the evolving financial landscape. With potential shifts in currency markets, gold's intriguing rise, and the Federal Reserve's actions, the world of finance remains dynamic and ever-changing. Stay informed and stay ahead in this fascinating journey through the world of economics and investments. So keep supporting us by sharing our videos. Please don't forget to subscribe to our channel. Thank you.